chill.
How long?
Damn, bro, the thing is just pumping, bro. Like no sell side delivery, bro. None, zero.
Wait, what's it? Tuesday?
Today's Tuesday, no Monday. Yeah.
Tuesday, Wednesday.
Well, it's Tuesday in somewhere, but it's Monday for our time.
Oh, big bets. Okay, what's up?
All right, so we're gonna go to what happened this morning. And I'm gonna show you why the shit was so ugly, bro. So, this is what I'm watching. This is Nasdaq. Zoom in a bit. Right here at 918, we raid the previous day high. It's a new all-time high right here.
Yep.
So as soon as that happens, what do we look for? You know, the OG. Yep. And so right here, I believe at 928 was where I feel like we would have gotten punished. It leaves a fair value gap, and you know, it respects it well. Probably gives a lot of handles too. Like, let's see, from this candle's high at 634 3/4, it goes as low as to 17. Oh, it wasn't even 20 handles, bro. So yeah, it would have been a terrible trade, bro. But yeah, like, so the bad thing with this is that it doesn't even take out a swing low.
Yeah.
If you peep that, so
Yeah, that's right.
it doesn't meet the criteria.
Did you hear me say it?
I did not, but
As
good.
soon as you said it, right after you said it, I said it.
All right, perfect, bro, perfect. All right, so then this candle comes up, knocks out liquidity, comes right back down lower, and this is what I mean by the opening bell is dog shit. You should never trade it unless you have really good experience on it and have good risk management, and that'll come with time. But even me, bro, I would have got clapped today, bro, because this is bullshit, bro. I would have been so mad. And then this happens right after this volatility. It's a lot of choppiness. Everyone trying to short this little SIBI, these fair value gaps right here, gets clapped on this candle. 950 to 1010. What is that?
Hey, yo.
950 to 1010. What is that?
Silver bullet?
No.
Yeah.
It's something to do with the algo. It's
Kill zone?
no, that's an hour. It's like a specific time frame. So every last 10 minutes of an hour to the first 10 minutes of an hour, so from 9:50 to 10:10, 10:50 to 11:10, and so forth, that's a time macro. And what it does is it spools price in a direction where it's headed next. So right here, the whole purpose of this 950 candle was to take out anyone that was profitable.
Any leftovers?
Yeah, any leftovers from this move right here. And then you kind of have all this huge displacement to the downside here, especially 10 o'clock. That's like your this right here is kind of like the sleight of hand, a hand trick that casinos use to see if or not if what's gonna happen next, you know.
Yeah.
Okay. And so come to the end of 1010, which is this candle right here. We're working inside of this little fair value gap. Consequent encroachment. Right. As soon as this happened, I see the respect of it. I see respect of this consequent encroachment level. Nothing closes above this range, and that's a really good sign. We have a little bit more consolidation, and that's fine. It's just accumulating orders. And then 1030 happens over here. I'm not there yet. So, all right, from here, go here, lower, bop. One more touch of it.
Yep.
We start to descend. 1020. This, all right. Would I have shorted this? Yeah, I would have. My stop loss would have been up here. The reason I say that is because it's after 10 o'clock. And so during 10 o'clock, I'm always looking for a liquidity run.
Right.
It doesn't have to be a previous day high or low. It doesn't have to be. It doesn't have to meet that criteria. What Silver Bullet is just a run on liquidity. Now, the main ones that we attack are going to be previous day high and lows, right, new week opening gap, and new day opening gaps. Those are the main three. All right. which is why here we already rated the previous day's high, right? So where could it possibly go next? What's a good target for me to go for, right?
South side.
South side, and what was one of the three I just mentioned?
Monday open.
Which is a
PRA.
close.
Yeah.
You chill, bro. All right, let me. You chill.
Alright, bro.
It's
What else could it be?
what else could it be? Tell me.
PRA Monday open.
What is the Monday opening price? It's one of two things that make this answer I'm looking for.
Liquidity.
No.
Fuck, I don't know.
All right. Friday's closing price and Monday's opening price.
Yeah.
What are they?
What are they? Bro?
What is that form?
New week opening gap.
Bingo. Thank you.
No, it is
Bingo.
liquidity.
No, it's not liquidity.
Imbalance.
It's imbalance. Yes. Imbalance. All right. All right. So from here, 952 forms a really good one. This is low. Let's see. Low risk entry right here. Why? It's in your. If I take out my fib retracement and I use my optimal trade entry, it retraces back into this little purple zone right here, from purple to purple. Okay.
Yeah.
Also inside of there is this is a deep. All right. What I'm trying to say is this is a deep premium SIBI.
Okay.
You have a high, a low, a retracement into a deep premium, which is your optimal trade entry to go short. Stop loss at that candle's high. Good risk management. You would have had to wait. Let's see. You would have gone in at 10:07. Your first 10 minutes, you're weathering just the accumulation. This shit is hard. This is probably the hardest part of the trade right here.
Yeah.
The second hardest part is seeing price jump this way, reaching almost towards the Monday opening, but not quite getting there. Okay, that's fine.
Good.
If you have multiple contracts, you can take profit at
Yeah.
20 handles and leave a runner for your terminus right here. That's what I like to do. Right, and you would have had to go whether the retracement into this little. Now I'm gonna do the same thing.
So high probability. So.
Yep.
Beautiful.
Right into optimal
Yeah.
trade entry. Okay, that's fine. Tosses it, and then it leaves this little fair value gap, which is pretty solid because it happens right after 10:30. I can't really say too much on this topic, but I know ICT has touched on this a bit about how 1 hour after the opening bell is a really key time in terms of where price wants to head next. And it'll be evident on what it wants to do based on the signatures and price that you have come to learn and know. So as you see, price is respecting this deep premium fair value gap. Now this one, what does it do right after? It doesn't keep pushing back up. No, that's not what price wants to do. It wants to head to this new week opening gap. And so this fair value gap right here, this would have been a really good opportunity to go short as well. Like this is an area where I would pyramid and add a contract. And when I pyramid it, so we're talking hypotheticals right now. Say I had two contracts from right here to 10:07, like we said. I took one profit here, so I have one runner. We weather this a little bit. Now I would add another contract going short here, back to two contracts, but this would be a completely separate trade from what I'm holding over here.
Right.
Okay, so in my mind, my entry's here. As soon as price goes down here, I'm probably gonna throw my stop loss above this fair value gap's high.
Right.
It shouldn't have to go all the way back up here, past that area, to go back lower again. We should see respective PDE raise and price running lower. Okay, that's where my runner is gonna be. Now, in my mind, I see a second trade of, okay, nice, this is my key fair value gap that I want to go short on. Right, it leaves a high at 621 and a quarter. That's this number right here, which is 30 handles away from my target. So that right there, I would put my stop loss above this candle's high, which is at 26 and a half. One contract would have a $10 stop loss and a $60 handle, or $60 take profit. Now that right there is really, really good opportunity. These are the setups right here. Just this little thing right here is something that you have to be really, really patient for, but when they present themselves, they help you a lot.
Dubs.
Because the risk to reward is just so prestige that even if you lose, you can't lose, bro. It's $10. The only way you lose is if you over leverage and don't take care of your risk.
Yeah.
All right. So now I'm saying that with one contract, right? $10, $60. All right, let's add another contract. Now it's $20 stop loss, but $120 in return. All right, let's add one more. $30, but now $180 in return. All right, so 5 contracts total, because you literally, if you put 5 contracts, you're risking 0.5% of your account. That's 0.5%, right? 50, and 60 times 5, $300 right here. Would have happened in 2 minutes. So I'm just giving you hypotheticals, bro. I obviously didn't take this trade, but yeah, this is something that's really, really good, that you just have to be patient with, bro. Say I would have woken up at my normal time at 5:45, which would have been like 8:45, and I'm up, and I have FOMO, and I take a couple trades in here, and I get knocked out, and now my mental's out of it, and so now I'm clouded, and this opportunity presents itself, but I'm not part of it because of what's going on back here. So being able to weather this, that's the hard part. This is the hardest part of it. It's an hour of price that is useless, but, keyword, but, we can use it to our advantage and capitalize if we are smart and diligent. Alright, so key notes to take away from this lesson. Shoot them at me before I say them.
I need to study more models because I would have never seen this.
Okay.
I need to do more research into the time macros. Time macros are
That's a
950 to 1010.
Yep.
Is like price. This price. Wow, what's the word you use, bro? What's that word? The P word.
It's a spoo.
Huh?
Spoo word.
Just say it.
Spooling.
Yeah.
Spooling. It's headed. It's getting ready to head in that direction. That's really the.
Exactly.
Yeah.
Yeah. So now I'm gonna look out for those for sure.
That's a good takeaway from that. Try to see what happens, like when you see, oh shit, it's 950. You know, like I kind of want to see what price does here, and just observe.
Yeah.
Right here, it starts going higher, but it doesn't, really push up higher, and then it really drops down. And by the end of that time frame, we're respecting this key PD array. And to bring it back to the first point you said is just, I need to study this more model. You don't have to go and do all of that, bro. It will come in time. What you need to do is study signatures and price and how price responds to it. This key fair value gap. This key fair value gap. Okay. What happens as soon as we, like this fair value gap as well. It was crucial at first, and then we took it over. And then see how it reacts over here. It's kind of holding price down, comes and touches this one, but then shoots it right back down, violates it again on the downside, doesn't come back up to it after that. Like these little PD arrays, and how price responds to them as it draws into higher targets, into our big targets, which are our higher time frame objectives. Okay. Other than that, it was pretty mundane, bro. I mean, the rest of the day I had no interest in. And yeah, bro, like even today at 6, Asia already took out the previous day's high, so we're not gonna have model 22. And so yeah, bro, like I don't care what happens overnight, I'm not trading it. It's just there's no opportunity. There's no, I mean, yeah, what's the good word for it? Yeah, there's nothing I want to see, and there's no good opportunity for me to participate in the market, especially as a speculator and someone that does not control the markets. I'm good.
Yeah.
I'm good, bro. I'm gonna take it off. I'm fine. I'm gonna use that time to make sure my mental's right, get things done in my real life that I want to do, and get a little human being with the boy right now.
Let's go. Yeah, that's
Yeah. Yes. Question mark.
bro. Human being. But,
See.
well, then yes.
What's that? What's that?
Hold on, let me fix that.
Yeah, I'm gonna need that fixed, bro. I don't understand the language you're speaking right there. Can you translate it for me?
Yeah, hold on. This might make more sense.
All right, that's universal language. I'm not my treat? Question mark.
Yeah.
I got you. I won't hold it against you too. I just treat you out, take you out like you're my passenger princess. You know.
I mean, technically I got you, and then you got me. If you give me again, that means I gotta get you next. So technically, I just get you back.
All right. Like I said, I'm not expecting anything back. If you want to, that's on you. But you could just ride with me, get out the house, get some fresh air, get a nice cool drink. Oh, Cap, kind of want to eat first, but we got nothing to eat.
I'm not gonna lie, it is 6:30.